Okay, everyone. Well, I wanted to welcome you all to the next WACCT webinar. I'm happy to have a colleague of mine and a friend who has really just taken the reins over at the Wyoming Taxpayers Association, been in front of the trustees a couple of times now, and Hank has really just proven that he, I think, likes the tax issues and is able to really discern them, really communicate them in a way that people can understand, and then lead his group forward in making a difference for what tax policy looks like in the state. So with that, I'm really pleased to have Hank Hoversland here today to talk to the group here. Hank, we've got trustees, we've got some presidents, we've got some other staff members in the colleges. We have folks from the Community College Commission. This is our family. And so welcome to our family. And I'll let you take it away. We'll have about 25 minutes with Hank sharing some slides and giving us some really good information. And then we will have plenty of time for questions. So with that, Hank, I'll let you take the show. Thank you.
Awesome. Yeah. Thanks, Aaron. And thank you all for having me and joining. I know it's a busy time of the year for everyone with the new year, whatever. And it's your lunchtime. So appreciate you being here. And I just wanted to say, appreciate all that you do. So I'll start to share my screen here. And I will present some slides. I sent these to Aaron already. Um, but if you do have, and Aaron, is that the right one or do I need to switch it again? You're muted.
It's back to notes again.
Okay, there we go. So that
Yep.
should no. Okay, sorry about that. So just gonna present these slides today, but one to um tell you all to please chime in as I go through each of them and ask any questions that you may have. So happy to answer those as we go so that we don't have to wait till the end. But like Aaron said, I'll go for 25 minutes or so. And then we can have more question and answer at the end if we need that. So I really tried to tailor this presentation for all you to the community college perspective. It's really kind of high level, but it's more about what's been happening in the legislature, what will continue to happen as we come up on this budget session. So we're going to talk about property taxes. Knowing all of you, I think you have a good idea of what they are. So it's just going to be a quick, I'll move on to our next slide and just talk about what we're going to show, what we're going to talk about today. But note that it's not going to be super in depth on property taxes as a whole, because I think you all understand that well, but want to really get into the meat of some of the proposals that we have coming down the pike and that have already been on the way. So just quickly, I like to start all my presentation with what taxes are and then talk about Wyoming's property tax structure as a whole, and then really get into what's changed, how this has impacted all of you at the community college level, and then what's going to happen or what could happen, and what those impacts will look like as well for all of you. So, as I said, I just like to talk about the purpose of taxation. I think it's important because obviously there's the two certainties in life, death and taxes. Taxes might be a little bit more fun to talk about, and Aaron said I do like this subject, but it's not a popular topic by any means. But taxes are an important structure by which we as citizens and businesses, I think it's important to note that citizens and businesses all together pool their resources to pay for infrastructure that we couldn't afford on our own. So one quote that I heard a couple weeks ago that I thought was good was, "You may own your house, but you don't own the road to it." That is a public infrastructure that we all pay for and pool our resources to pay for together because we couldn't afford to pay for a road on our own for the most part. So the goal for taxation is to ensure that taxpayers are paying their fair share, no more or no less, and it's the responsibility of the legislature to determine what that amount is. And they've had their debates over this. So what does Wyoming structure look like? Just kind of want to touch on the Cowboy Family Report that Wyoming Taxpayers Association put out in mid 2024. And so this is just an overview of what the Cowboy family is. Who is the Cowboy family? It's a family of four with two kids in K through 12 education. They're making 125,000 combined with a home valued at 370,000. So what does the Cowboy family, and I think it's always important to note on this that the Cowboy family, we focus on the state and local taxes that are paid and don't really talk about federal taxes because that's a whole other issue. But what our report shows is that the Cowboy family pays about $4,400 worth in state and local taxes, and it receives over $61,000 in services from these taxes that they paid. So, in other terms, for every dollar that the Cowboy family pays in taxes, they receive $13.83 in services back from the state and local governments here in the state of Wyoming. So that's a pretty good bang for your buck. If you had that ROI, I think you'd probably be pretty happy and make that investment. Um, as you can see there on the left, the property taxes make up the lion's share of what the Cowboy family pays in taxes. It's 54%, but that's still that $2,400 almost does not even pay for the county services that they receive back from counties, from things like road and bridge, parks and rec, and other things that counties provide as services. And I think it's always important because when we talk about taxes, it's a really siloed discussion. It's one side. We pay this much in taxes. My property taxes have gone up this much year over year. Well, you're also getting services from those taxes, and you're really being subsidized here in Wyoming for those services you receive. Um, a, a, a large share of that difference of almost 57,000 is from the mineral industry directly, whether that be severance taxes paid to the state, sales and use taxes that are shared with local governments in the state, or property taxes that we all know are a local resource. And then the non-mineral industry pays about 31,000. What that does include is the investment income, which many can argue that is actually a mineral income because minerals paid severance taxes to go uh, into those permanent funds. So that's just a quick overview on the Cowboy family. But what does property taxation look like in Wyoming? Well, we pay about on residential about 0.6% of your home's value is and this was in 2023. So this is before we saw anything change in major portions at the legislative level. So that makes us 37th highest or 13th or 14th lowest in the nation for property taxes. So we're doing pretty good. We're better than Texas, where they pay 1.6%, Illinois at over 2%, or New Jersey, which is almost 2.25%. So I always like to kind of put it into context. I remember one time at the Capitol, a new family had moved to the area, and they were wanted to come see the Capitol. And I remember they came in and were like, and it was during session, and they were like, "What are they talking about today?" And it was property taxes, and they had moved from Nebraska, and they were quite happy with their property taxes here. So I think we lose sight sometimes here in Wyoming of really how good we have it, because we really do rely on the mineral industry and other industries here in Wyoming to pay for the services that we receive. This is just a quick showing who pays the property taxes statewide in 2024 and 2025 for those tax years. And then the next slide will be who receives them. So obviously, both years directly, the mineral industry has paid the largest portion at 44 and 47%. This is only based on the mineral ad valorem. So this is what they sever from the ground. If you take into account industrial, the equipment and all the stuff that they have to use to actually get that out of the ground, it goes to over 50% for both years. Industrial is the third largest taxpayer after residential, which was about a third in 2024, and then down to 30% in 2025. So you can see the impact already. 2025, that includes the 25% exemption, long-term homeowners, a lot of different things in there. So you can see that almost $200 million decrease. It hit in 2025, but still a lot is the same. We see the mineral industry is paying the largest portion, but they're interestingly enough, the commercial and industrial sectors have seen increases, and those are unabated. There are no exemptions, large scale exemptions for them that have come on. They don't have a 4% cap. They go up as much as the market says, and so they're starting to take on more of the share than they have in the past. And then quickly, just here's who benefits, who provide those services from those property taxes. So community colleges are the second smallest recipient of those, only in front of municipalities. The lion's share is K through 12 education, and then counties and special districts. So that's obviously without community colleges. Some analyses will include community colleges, special districts. This one pulls them out, so it's just shows that to a little bit more of a granular level on that. But you can still see that last year, or the taxes that will be paid, that were paid in November and then will be paid in May, there was $6 million less statewide for community colleges. And so that includes all classes. So what has changed in property taxes? Quite a lot. So we're going to talk about what's changed in the past and then go on to what could be changing in this session or beyond that. So first we had a constitutional amendment. This was known as Amendment A, that was passed in November of 2024, but actually passed the legislature in 2023. And so what this did was created a fourth class, sorry, of property in the Constitution for purposes of property taxation. So before it was minerals, industrial, and then all other. And that all other category had residential, commercial, ag, and then personal property in it. So now the legislature and the voters decided that they believe should be a fourth class in their residential real property, so that the assessment ratio could actually be lowered on that. So right now, about the lowest that could go is 8.3%. We have a bill that should be dropping at any time now that will consider that from the Joint Revenue Interim Committee. So we'll talk about kind of what that looks like later on. This was considered by the legislature last year, but did not pass with all of the other multitude of exemptions that they passed. So we'll get to that here in a little bit. We also had the long-term homeowners property tax exemption. So that was 50% exemption with no cap on that. So that could be if your home was worth $10 million, then it would be reduced to 5 million if you qualified. And those who qualify include those who are 65 years and older and have paid property taxes in Wyoming for at least 25 years. So we'll get to the fiscal impact on just community colleges a little later on, but statewide that exempted $680.4 million of assessed value, or tax exemption of a little over $45 million. When the legislature passed this in 2024, it put a sunset on it to only be effective for 2 years. So that was tax year 2025 last year and this tax year. Again, we'll talk about it a little later, but there are bills to get rid of that exemption and change it or that sunset. My apologies, that sunset and change it just a little bit. The legislature also increased the property tax refund program. This is important because the House Bill 3 from 24, and we'll talk about it more. And I think you all probably know what backfill is, but just to talk about backfill, that's the state using its resources to fund these tax exemptions for local governments from municipalities, special districts, community colleges, counties, and the likes. So the property tax refund program is important though, because it actually uses the state general fund to pay a refund to some of those people who are the most needy. In the past, the Wyoming Taxpayers Association has been in favor of this because it's a means-tested program that really helps out those who are most in need for refunds and who are paying a larger percentage of their income towards property taxes. So that just increased the eligibility, which increased by about a little over 1,000 people statewide. Also in 2024, the legislature passed House Bill 45. This is known as the cap bill. So it's a cap that your residential assessed values cannot increase more than 4% each year. This was in the news a little bit recently. The Board of Equalization, had contemplated actually filing in court a declaratory judgment action, arguing that this was unconstitutional. The governor asked that they lay it back at this time, as assessors are right now currently assessing residential structures and commercial, industrial, all the likes. So There are arguments about this. In fiscal year 2025, this included both land and structures, where in 2024 it only included the residential structures, so now it includes land. The fiscal impact, it exempted $721 million of assessed value, leading to again a little over 45 million of dollars worth of taxes being exempted. Some make the case, and it's probably not wrong, that this is not really a tax exemption. Rather, it's just unrealized taxes from local governments. The lion's share of that, 55% of it, is all within Teton County because there's no cap on it. It's just 4% of whatever. So if you have a $10 million home, 4% is a lot bigger. Than 4% of 400,000. So the tax savings is going to be greater than somebody who has that smaller home, or maybe not even a smaller home, just a lesser valued home. And then lastly, in 24, the legislature doubled the veterans exemption. Again, this one's important because it is backfilled by the state treasurer. So it just increased the general fund liability on the state, but also increase that assessed value exemption to $6,000, which is about worth $63,000 of fair market value. The legislature, after going out and having an election, decided that this property tax relief was not quite enough yet. And so just last session in January and February of 2025, the legislature passed further tax reductions. These two that are on the screen right now talk about personal property taxes. So these are one way in which the legislature actually provided some tax relief to business and not residential taxpayers. But I think they're important because all of the community colleges tax on the whole district or on the whole county. So it includes large shares in some cases of business and mineral and industrial taxpayers. So the first bill, the business property tax exemption, going to have a lesser impact at about $8.8 million statewide, with about 5.5 million of that coming directly to K through 12 schools, while the other 3.3 million was shared statewide. The bigger bill was actually not a tax reduction, but it was just a valuation bill, but it had a larger fiscal note. So we won't know the impacts of this really until valuations start to go out in March and April timeframe. But the Department of Revenue's estimate was 33.5 million statewide, with about 21 million of that coming to K-12 education. I don't know that we'll see reports on what this actually means because it's not an exemption, whereas Senate File 48 was. So it remains to be seen what the fiscal impact of this is, but I think it's important to note for community college districts. In 2025, the legislature also passed a bill talking about how exemptions should be ordered because so many of them are coming down all at once. We're seeing that the Department of Revenue needed a little bit of guidance on how to apply, and assessors on how to apply those in a sequential order. So that happened. And then there was also a bill responding to Uinta County case on state lands that kind of just implemented the status quo because of a court case. But that's not a big impact. So the big one is obviously Senate File 69, which was the 25% homeowner property tax exemption. This 25% is capped at the first $1 million of fair market value on the residential structures and land in tax year 2025. The way the bill was structured and was signed by the governor, the legislature said that this tax year, 2026, the exemption will only be applicable to homeowners who reside in that structure for 8 months out of the year. So it's just trying to provide relief to homeowners, single family homeowners who actually live in Wyoming and didn't maybe not have created the problem of increasing assessed values. I think that's always important to note that assessed values were increasing at double-digit percentages, and the legislature felt that they needed to act. And in some ways, they did so with a scalpel, and in other ways, they just made these broad-based exemptions. And so this was one way in which they tried to really provide the relief to those Wyoming citizens who actually live in their homes. Importantly, this can't be coupled with the 50% long-term homeowners exemption, and it's not sunset. So statewide, this had an impact of almost $100 million last year in taxes and 1.47 billion in assessed value, bringing residential uh, the residential assessed value closer to what it was in 2022. So what do these impacts look like on community colleges? So I kind of pulled out, looked at the State Board of Equalization, the mill levies that community colleges have. Importantly, and you're probably looking at this saying that's not our full mill levy. I did take out bonds and interest because of the way that those mill levies are calculated. So this is mostly just on operating mill levies. So just wanted to point that out to begin with. But I just pulled out each of the community college districts and what their levies was. So this was the 4% cap impacts. And again, want to note here that I did send the slides to Erin, so if you want them after, she has them in PDF form, so you can have this. And I'm sure many of you already know these numbers pretty well, but this was just from the exemptions from the 4% cap. Um, as I noted, this one affected Teton County more than any other county. So these 8 counties accounted for about 30% of the assessed value exempted statewide in 2025. So 213 of that $721 million. The long-term homeowner, these counties had an outsized impact. So they had accounted for about 55% of the assessed value exempted in 2025 from the long-term homeowners exemption. So that 50%, leading to about $2 million in taxes exempted from 25 over 24 numbers. And then the 25% in 2025 accounted for almost $4.4 million worth of taxes exempted. And again, these 8 counties, just 8 of 23 counties accounted for 57% of the assessed value exempted in 2025. There was only one county actually that didn't have a double-digit decrease in assessed value, and that was Teton County, and that's because of the cap of 100 million or $1 million, sorry, $1 million on that 25%. So they have a lot of homes that are worth more than $1 million, and so they might not have seen that relief as much as other counties. Most counties, though, were over 20% decreases year over year in the residential category. So cumulatively, what did these 2023 to 2025 session impacts look like? About 7.5 million in tax or revenue reductions. So that does include the 4% cap. So you could actually say that it was probably closer to 6.3 million in reductions, and then another 1.1 or so million that was unrealized from that 4% cap. What's on the horizon? I think this is important to talk about, so I want to spend some time here. So bill drafts that we have seen already come on property tax purposes are House Bill 45 and Senate File 39. These both repeal that sunset on the long-term homeowner tax exemption, that 50% exemption for those 65 and older and paying property taxes in Wyoming for 25 years. The one difference in these is the Revenue Committee bill, which is House Bill 45, just changes the date in which people need to claim this back from the fourth Monday in May to March 1st, and then allows them to just call in to the assessor's office, much like those who receive the veterans tax exemption can, rather than having to fill out paperwork each year. House Joint Resolution 4 is a constitutional amendment that essentially should be paired with another enacting legislation that would allow, if passed by the legislature and voters, for them to go to acquisition value, which they've considered in the past. We don't have good fiscal estimates for that. There's only one state that does that right now, and that's California. Idaho tried it and repealed it 1 year later because of the administrative burden that had on assessors in that state. And then we have 2 bills that we didn't really know were coming. So first was voter approval, House Bill 58, which is sponsored by the Speaker of the House, voter approval for mill levy imposition. And this affects both recreation district mill levies that typically are imposed by K through 12 school districts, but then also BOCES mills that I think you all know very much about. but it would require voters to approve those every 4 years rather than allowing them to be board approved. And then finally, bond election language process also is impactful to community colleges. Many of you have bonds for capital purposes. This would just talk about it pretty much places in that statute that it needs to be impartial language that's unbiased. And if a voter feels that the language on the ballot did not meet that standard, they can take it to a judge who can rule that it wasn't, and then it would pretty much nullify that election if the language was not impartial and unbiased. So those are two to watch out for that were sponsored by individual legislators. We also have some bill drafts that haven't dropped that the Joint Revenue and Interim Committee passed. So there's that acquisition value enacting legislation. There's also a bill to remove the owner occupied provision on the 25% exemption. Um, that would be retroactive to this tax year if it passes as it's introduced. There's implementation of the Amendment A that we talked about that passed in November 24, which would reduce residential to 8.3 with no subclass as allowed by the Constitution, and then sales tax replacement of all residential property tax. It's not a full replacement, and we'll kind of get to that. We also have in the 2026 general election, so this November, we will see the People's Ballot Initiative, which is a 50% exemption for those who have lived in Wyoming for at least a year and live in the residence for 6 years. So it's got an owner-occupied provision. I don't have fiscal estimates on that coming in the later slides that we'll try and get to in the next. I'll try and wrap up in 5 minutes. Sorry, Aaron, I'm looking at the time. But I don't have fiscal estimates on that, and that's because there's some competing ways to look at that. So the way the ballot initiative actually states, it is a piece of legislation that is passed by the people, and it's not a constitutional amendment. But what this ballot initiative says is that people can't claim more than one homeowner's exemption in any given tax year. LSO, the legislative staff have taken that, have read the entire initiative to say that if this passes in 2026 and the legislature doesn't act, that people can take both the long-term homeowners exemption and this 50%. With House Bill 279, that wouldn't be 100% reduction, rather it'd be 50% and then 50% of that 50%. So it'd be more like a 75% reduction and then 62.5 for those people who don't qualify for the long-term homeowner. So there are questions on what this means. So I don't have really good numbers on this for you, so I apologize about that. But it's an important thing that will be coming up in November. So this is, again, just restating the long-term homeowners exemption impact because that bill of the sunset repealer bills. So again, that was about 2 million for community colleges statewide. And I believe this is a little in tax year 2026, this is expected to go up a little bit to $2 million in taxes just because of 2% growth by Craig. But we also don't know if people will if they pass away, they fall off the rolls and don't qualify for it, or how many more people will qualify for it this year compared to last year. So this is pretty much just restating what 2024 was, or 2025, my apologies. This is my best guess at what removing the owner-occupied provision would have in if that bill passes by the Joint Revenue Committee. So this is by each community college district with the mills, their operating mills that they levy. So this is about $1.5 million that would be added back to the tax rolls expected based on some economic analysis division, what their numbers say on who actually occupies homes in the state of Wyoming. So it's going to be different in each county. This is a really rough estimate because it assumes that it shows unoccupied and non-owner occupied homes, so you have to multiply those. But then it doesn't take into account if the home's over $1 million. So this is just 25% of assessed value essentially on that. So this is a really rough estimate, but just wanted to give you some numbers that you can maybe play with on that you might see back in next fiscal year because of the owner occupied provision. But if it goes away, again, you'll see an increase. If the legislature decides to implement Amendment A and go down to 8.3 of assessed ratio, assessment ratio. This would impact community colleges further by $1.85 million statewide, just based, which is a 12.6 reduction percent reduction across the board, because this applies equally to all residential homes. This impact also does include the 2% growth factor that Craig has estimated in its January report. And then finally, the revenue reduction to community colleges if sales tax, if a 2% statewide sales tax replaces all residential property taxes, would be about $2 million. The way I read the bill and understand it is that it would be about a 13.3% reduction because sales taxes, and I think that's actually probably overestimating it with some of the provisions in the bill. So this is probably a low end, if I best guess, with current Craig projections at 2 million. And that's because a 2% sales tax statewide without industrial property paying would not come close to paying for what residential property tax actually pays. And then finally, here's the potential cumulative impacts of the 2026 session. So again, it's pretty close. Actually, yeah, the number at the bottom didn't change, and I apologize for that. I'll go fix that, but it's quite a lot. And I didn't include the sales tax replacement bill in that because that would get rid of all, the way I read it right now is it would get rid of all residential property tax. So this is just if they get rid of the owner occupied provision and get rid of and then change the assessment ratio. So that's some cumulative impacts on that. So with that, I will take any questions if you have them and stop sharing my screen quickly.
Thank you, Hank. Walt Tribely from Sheridan. Would you remind me of what the cumulative cumulative revenue loss is going into this year? You had a slide where you counted up all the different for our entire system.
Yeah. So statewide, let me go quickly back to that. So statewide, that was about 7.5 million, and for you up in Sheridan County, that was almost 920,000.
Okay,
Now that 920,000 and 7.5 million includes the 4% cap, which some don't see as a tax really exemption. It's just unrealized taxes. So that's included in there, but it's about 920 with that from just the actions of 2023 through 25.
So thank you. So 7.5 million is exactly the amount that the Joint Appropriations Committee put in for CTE funding to be distributed by the allocation model, because all of us are getting impacted by the tax cuts. So that's not including anything, as you've pointed out, that's coming this session or what's going to happen next November, the vote of the people. But just for everybody on the call, that amount of tax, everybody's feeling the loss of revenue. And so that 7.5 million coming in and going out through the allocation model is in play right now. So thank you.
Absolutely. And what I would add to that is that 7.5 million is just on residential. So if you are a minerals based county, you might have seen further reductions because the minerals market has been changing, obviously. And those are usually a year in arrears. So coming up in this next year, minerals will likely go down also. I mean, natural gas, if you're lucky enough to have that, has been going up, but the price of gas or of oil is at $55 a barrel, and so that will also have impacts if production increases. Don't offset that, and so that's another issue that is faced on that kind of boom and bust in the minerals industry that will also impact. So this is just on residential, which has historically been one of the most stable classes for property taxation, just because of the market and values.
Okay. Thank you, Hank.
I'll chime in real quick. Thank you for that, Hank. Such great information. What I'm hearing, and even playing off of Dr. Tribely's question, is it's important to really understand the dynamics for the 8 taxing counties of the community colleges. That the percentage that residential plays is vastly different. And in fact, Sheridan has a very, very high percentage of residential taxpayers in their space. So the percentage of residential, the play that minerals has in there, all of this is being discussed. And if you listen to the Craig report, they did highlight that with the price of natural gas versus oil, et cetera. So Hank, I just wanted to say thank you for mentioning that. Those dynamics are what will be important as the colleges communicate this out with the various impacts locally versus just that statewide number. Is there another question for Hank that is among the group? Go ahead, raise your hand, or just unmute yourself and it'll show.
Hi, this is Lisa Watson, Hank, the president at Northwest College up here. I know one of the things that we talk about is educating others on the community colleges, and I'm sure at WTA you're doing that as well. The slide that you had where we were talking about, the Wyoming citizen and the tax effect there. Have you guys ever put together anything that would be like comparative to our surrounding states or something like that? Because I'm not sure that we're going to have a lot of luck on educating our legislators. That's not meant to be a bash on everybody. But when we think about educating our citizens and our communities on their share, I know there are people in our communities that are pushing back a little bit, saying, I don't want to lose services, but I don't always know that they have a good sense, comparatively of what life is like if I lived in Colorado or Montana or something like that. And I could see real value in having a slide like that to share, not only at my board meeting, but, if we were to do an op-ed or something, that could talk a little bit about that. Have you guys done any work on that?
Yeah, so us specifically, no, but there is some good stuff from the Tax Foundation, and I have that in some other slides I have, and I can share one of those slides with Aaron on what the Tax Foundation shows. But what they show year over year is a couple of things. So first, citizens in Wyoming have the second lowest tax burden, only to Alaska, and that's because Alaska sends massive rebates back to their taxpayers each year. But that's really using mineral wealth to refund their residential taxpayers, and that's something that we haven't directly done in Wyoming, but rather we've been more fiscally prudent, in my opinion, and used that mineral wealth to invest in our permanent mineral trust fund and common school land fund, and use that to actually offset the tax burden of Wyoming residents here. And what that did in fiscal year 2025, the permanent mineral trust fund income for the first time ever was the #1 source of income for the general fund in 2025. And so that has already showed to pay off its benefits and really I would argue decrease the tax burden on Wyoming residents, but we're #2. The other thing that the Tax Foundation has shown year over year is that Wyoming ranks #1 in the state tax competitiveness index. So that's for both business and personal tax, individual taxes. A lot of that is because we don't have income taxes on corporations or individuals, but the one thing I always like to caveat that with is we might be #1 on the state tax competitiveness index, but we haven't seen a whole lot of economic development from that. I mean, we hear a lot of these people say that a low tax base is really going to bring people and jobs and new industries, and we haven't seen that. And I think during the Freudenthal administration, he kind of put that out there and showed that businesses do like a low tax environment, but they also like some stability and certainty in their communities for their workers that are going to come. And we just have not been able to invest enough in our communities in different areas to bring new business to us. And so that's been somewhat of an issue, I think, as well. But certainly individuals get like I said, almost 1 to 14x return on their tax investment. And they're the second lowest in the nation.
Thanks for that. I mean, I appreciate your comments about the lack of the conversation around business and business needs as well. But we oftentimes we see the rhetoric as being led to the citizens and how the effect is on them individually, and that's always a challenge. But it'd be great to be able to see some of that. I really love these slides, by the way. Thank you. I really feel like our CFOs would really benefit from seeing some of this, even a conversation as they think about how to manage some of this with the presidents.
And Hank, is this slideshow available? Is this something that is available on the WTA website?
I emailed it to Erin, and so she can.
Okay, very good. Thank you.
Yep.
Or I think my email's on there too. And if you have questions going forward, my email should be on the slideshow as well. So feel free to reach out, call, text, whatever, email, and I'm happy to answer questions.
That's excellent because that's exactly where I was going. There are a couple of data points I would love to do a drill down on Goshen and sorry, this is Jeff Hawes with Eastern Wyoming College. So
Yeah,
Yep, Hank, fix that one slide that you
yeah,
mentioned that, and
yeah.
then I'll send that out. Thank you for mentioning that tax foundation information. But first of all, the slide showing the services and versus what people pay, that's my favorite slide in the history of all information that gets shared in Wyoming and has always been my favorite slide because it really just shows that we're getting a really good deal here as average citizens. And so by far and away, that's my favorite slide to share. So we do have a dedicated page on our WACCT website to property tax information. A lot of what Hank has shared and has provided for us as partners with WTA is up there, and as well as the Department of Revenue, et cetera. So we'll be sure and share this out both on our webinar page and on that property tax page. But Hank, I wanted to also ask you about there was a recent article, was it written by the Tax Foundation talking about the kind of the environment of property tax issues in the state? Do you know what I'm talking about? That would be another thing that I think would be helpful to share out to people.
Yeah, yeah, absolutely. So there's a couple of things the Tax Foundation has done really good work on, and we partner with them and work with them often. Uh, we're not alone in some of this, so they see this a lot of other places, and so that helps as well. But the Tax Foundation has done a couple of things, and I have sent it out a couple of times, and will continue to do so as session comes up on some other ways in which they can think about helping affected homeowners or different things like that. But what they've shown, and I think it's really ripe conversation because as I talked about with that sales tax replacement bill, the issues, I mean, I have a whole host of issues with getting rid of residential property tax and replacing it with the sales tax. But there's a whole lot of issues. It's a tax shift. It's a tax increase for people like who own so businesses, they will see tax increases, but then so will renters. And I think the issue with the sales tax is that it's a regressive tax that the lower income pays more of a higher percentage of their income towards sales taxes than do the higher net worth individuals. And so that creates an issue. And those tend to be the people, the lower income individuals tend to be the ones who are renting because they cannot afford a home and different things like that. And so, yeah, I'll send some of that over to Erin as well to kind of talk about that and what the Tax Foundation has done, especially talking about that, because I think that's the one. I don't know. I don't know really what this session will bring. I think it's a question for everyone, but I think that's the bill that has seemed to have some of the most steam, at least in the interim, and it was introduced by a representative the past two sessions who used to be the Speaker of the House and is seen as a more moderate member and has now somewhat been championed by those in the majority in the House in the Freedom Caucus. And so that's where some worries go, but I think there's been some fractures. And so really, I think the biggest thing this year is going to probably be the People's Ballot Initiative that has the highest likelihood of passing right now.
You know, Hank, I love what you just said because the crystal ball is hard to predict. It looks a little bit different for everybody, but it really begs the question of what's enough, right? And then really considering the shift in tax burden in a very already unstable tax structure that we live in Wyoming already. So how does this all shake out in the end? That's really where the magic is. But what's realistic for what passes in the session, I don't think we quite know yet. But are we at that tipping point? Maybe we're getting there. So that'll kind of be the result of how we shake out. But looking forward to the ballot initiative, which is really on the minds of a lot of people, I wanted to just share a little bit, and I know some of you know this, and Hank mentioned this, a lot of other states, this is very popular. Let's take away the burden on the residents of property tax. Let's shift it to someone else. It's better if someone else pays the tax. Doesn't everyone think that way? Except for when it comes down to what the services actually are. There was a ballot initiative in North Dakota in recent years, and we're all starting to study what happened up there because it was successfully defeated. And it turns out there was a pretty widespread effort to educate the electorate and really help them understand whether it's factual-based data or values-based data. Really, what is the kind of environment that we want our state to bring to foster economic growth, to foster our youth coming up in our state? What kind of communities do we want? I think that's the kind of conversation in Wyoming that we will have to talk about with this ballot initiative facing us in all of our communities. So that's more of a statement, but I didn't know if Hank, if you wanted to reflect on that.
Yeah, I think, and I mentioned it a little early on in talking about, we really, when we talk about these issues, we talk about either one side or the other, taxes or services. I think what the biggest thing that both taxpayers and those who receive taxes and invest them in communities and different things, we need to tie those together, because I think sometimes when you go to the ballot box and see that you could save 50%, I mean, who wouldn't want to do that? But the understanding of what those taxes pay for and the services that they pay for is important, from the community college level to the county level, to municipalities. It's important for everyone to understand how their property taxes are invested in their communities and what that means. And so again, talking about that, you own your home, but not the road to it, is important, and how we come together as citizens to really pool our resources to invest in our communities is an important conversation going into this, both the session and past that as we go into the election season.
I have
Any
a
other
quick,
questions for Hank? Someone speaking up.
Erin, it's Christy.
Oh,
I
hi,
just had a quick question going back to the idea of what's enough and this fact that we are the second lowest in the country as far as our tax burden already. Do you know if we've historically been the second, or was it higher in recent years?
I think even when we did see increased assessed values because of the housing market changing, we still were low. And like I said, that one that we showed, I mean, we're not the lowest in property taxes, but a lot of those other states that might be lower than us have other taxes, including income taxes. So as far back as I can remember, and Aaron, correct me if I'm wrong, we've probably been pretty close to second. Just hard to overcome Alaska because of the way that their structure is set up with their permanent fund wealth and how that goes back to citizens. But as far as I can remember, I think we've been second. And Aaron, I don't know if you have
Yep.
any.
I would have the same recollection. I think the whole time, for those of you who don't know, I used to have Hank's job, what, about 10, 11 years ago. And it was always in that space. So it hasn't been higher, Christy, to your question.
Thank you. And thanks for this presentation.
Yeah.
Any other questions for Hank? We have about 9 minutes.
I think one thing I failed to mention and kind of wanted to in response to Lisa's question and a couple other questions too is the bond issue, because I think that is an issue that may not affect community colleges as much as other special districts who don't cover a whole county. But from my recollection, one statistic I heard that in Laramie County last year, because of the residential assessments, those exemptions being passed, the shift for those bonds, because of the way they are calculated, the mill levies tend to go up when assessments go down because you still have to pay that principal and interest. The shift was 50% over to business, further to business in Laramie County alone. And so that's an issue that we're watching out for on the taxpayer side on those bonds. But I think it's interesting to note too for community colleges is if we get rid of residential property tax, you will still, while counties are different, Lisa's county is about 50% residential property tax, and Sheridan County's, I think, closer 65 or 70 from what I recall. It's a lot easier to pass a bond when you don't have to pay for it. So citizens are the one who are going to vote on it, but then don't have to pay. And so that's where a lot of our worry comes in on the taxpayer side too, is if we get rid of residential property tax, that Cowboy family is going to look a whole lot different. But also the bonds are like have even higher likelihood of being passed because it's going to be shifted to other taxpayers, ag through minerals.
And that's a dynamic that I think we're going to hear more and more that Hank just mentioned, that shift in that burden. And he's mentioned this throughout this talk today. I think it'd be really behoove, this effort, especially heading into the legislative session and the ballot initiative is how are these businesses going to be speaking up? Whether it's small businesses up to the large mineral companies, it just is going to increase that burden on them and just make things a little bit more upside down in terms of who's paying for the services that are received. So it's just going to augment that dynamic here. And Hank's membership is made up of folks who are those large taxpayers to small business, to the entities that utilize the tax dollar. So he's got that very unique mix. But folks are talking about it, and I expect that you'll hear it in your communities as well.
I know it's a local issue, but is there any statewide data on the, how many people have opted out by county to date for the 25% property tax? I mean, obviously February 1st is the deadline, or is that all data that you'll review after the decisions are final?
Yeah, Jeff, that's a good question. So the Department of Revenue pushed that back to March 1st because when this bill passed and the owner occupied went into place, they had expected somewhere closer to 170,000 structure residential properties that would qualify for this just based on economic analysis data. There's no real opt-out numbers. So last I heard, that was probably early this month, there was closer to 30,000 applicants out of that 170,000. But there's no way of showing how many people have just opted not to do that versus have not done it yet. So they pushed it back to March 1st. This bill is obviously will still go through the session, and there's going to be debate about it. My argument has been voters might see a tax increase for 1 year, but once they see that, I'm sure they'll be quick to sign up on the website and get that 25% exemption back as well. And I think assessors are trying to notify homeowners about this, both through their notice of values and their tax bills through the treasurer's office. But at some point, there's also personal responsibility. You have to pay attention to if it's that big of an issue. So right now, the last I heard was closer to 30,000 in early this month. I know there's been some pushes recently, and we'll have a month to go before that happens. But so that number that I had, I think it was almost 2 million that could come back on the tax roll. I can't recall. Could likely be higher, just because we haven't seen the full utilization, and I just don't know if what's ignorance and what is willful not wanting to take that.
Yeah. And I think the Department of Revenue will have that by county, wouldn't they, Hank?
Yeah, so when I had talked to Ken, he didn't have it He just had the statewide numbers. They don't have the assessed value either, because that's going to be an important number as well. So
Yeah.
that really won't be known until April.
Thank you.
Yeah. Yeah, I think to Micah's comment here that a lot of people in the state probably didn't know they needed to apply for it. And so I know the assessors and others have been trying to get the word out. But that's an important element of some of these, is that it's not just automatic. Well, any other questions? We have a few minutes, but this has been a really robust conversation. And Hank, I want to thank you again for your willingness and really for digging down to the issue specific to the community colleges. Thank you for that.
Yeah, yes. Thank you so much for having me. Always happy to do this. Like you said, it's maybe a dry topic, but I always enjoy it. So thanks for the questions. And like I said, feel free to reach out as things go through session and whatnot.
Thank you for that. WACCT is a member of the Taxpayers Association. I think there's always an invitation if individual colleges want to support Hank's organization. It's a pretty small fee. It's definitely worth its weight in what you pay for the information that you receive and the communications that you get. So I'll let us wrap up our time here. I'll send out the slides, the resources. We'll be working on our website for more information. And of course, these bills will be a primary focus for WACCT as we track the bills heading into this legislative session. So everyone, and Hank, thank you. Have a great day.
Thank you, Hank. Thank you, Aaron.